Barry, just real quick, retail investors can get access to this investment theme that you're talking about, private credit. How do they do that?
Primarily through the ETF market, and there's a number of options for them to do that. They should talk to their financial advisor and have them do some research on that. Personally, I am sticking to large U.S. private equity and private credit managers who have products to do that because they've been doing it for 10 to 15 years. They've got a lot of experience, where maybe some of the Canadian people have much less experience to that and don't have the scale to do that. So I
Hmm.
like size and experience in this market.
Got it. Speaking of Canada, what is your view right now on the Canadian economy? Where do we stand? What do you think the BOC does? What do our Canadian viewers need to be thinking about?
Well, I definitely think that the Canadian economy is going to be significantly weaker than the US. And therefore, you might have inflation come down more in
Hmm.
Canada, and therefore rates, Bank of Canada cut more than the Fed. So I would see Canada. I'd rather own corporate credit in the U.S. and government bonds in Canada, um, which is a bit interesting because I'm bullish on oil, as I
Right.
noted earlier, which is usually good for the Canadian economy.
Hmm.
But I think that the productivity, the lack of productivity in the Canadian economy, and just the huge government deficits and um, all the weaknesses in the economy, the inefficiencies of the Canadian economy, are going to overwhelm the benefit of oil. So I
Hmm.
think you're going to see lower interest rates in Canada, a weaker economy, and a weaker Canadian dollar.
Well, and interestingly, to your point, despite the fact that oil has been on a tear to the upside, it has not impacted the Canadian dollar, which should tell you
Now,
everything.
yeah, that's a big indicator because usually the Canadian dollar will move with oil, and oil's 25% higher, maybe 30% higher, and the Canadian dollar is a little bit weaker.
Yes, yes, because of the issues surrounding government policies, essentially, and
Yeah.
where we're at right now. And to your point, the lack of productivity. Barry, we only have about 2 minutes left, but it sounds as though your one of your main focuses right now is the private credit market. I love talking to you because you always have themes. You always have, like, you look at the big picture and then there's something that you conclude from it. Private credit. Is there anything else? Is it gold? I doubt it.
Well, I think, for a small part of your portfolio, buying gold and oil makes sense for a trade for the next 12 to 18 months.
Okay.
Um, and, they're bumpy trades. I'm actually looking for a little pullback in oil before I increase my exposure to oil, because it's moved a lot in the last couple of weeks. But I think gold and oil are going to perform well, at least in the next 6 months, if not longer. And having some exposure in a portfolio to those two things. And you
Mm-hmm.
can use ETFs for that too. You can either buy gold or gold mining shares, and you can buy oil or oil company shares. I
Mm-hmm.
would buy a little bit of all of them.
And I can't recall, are you involved in Bitcoin at all?
Yeah, I bought Bitcoin at 17,000. I've wrote it up, wrote it down, wrote it back up. I want to have 3 or 4% of my portfolio in Bitcoin and/or in Ethereum. The rest of them
Mm-hmm.
I don't want any part of. And if they go to 1 million, then everything else is probably down. So I look
True.
at it as a portfolio hedge.
Right. Understood. And I think there's so much more focus on buying into the Bitcoin on the back of the U.S. regulators allowing retail investors to have access. And interestingly, we've had access in Canada for quite some time. We were the leaders. Barry, great to speak
Right.
with you as always. Thank you very, very much. Appreciate it.
Okay, it's great to see you. I look forward to our next chat.
Thank you. Same as well. And thank you very much for watching. We'll see you next time.